Attention commercial building owners and building contractors. You're about to hear important information pertaining to one of the largest and legal multi-million-dollar tax deductions in the U.S. commercial building industry. Hi, my name is Anthony Delmedico, Commercial Division with Showtime Exteriors, and I'd like to share some important information with you regarding the Section 179 tax deduction for commercial building owners. Commercial building owners can now deduct $1.16 million in qualifying building improvement projects. For example, things like commercial re-roofs, coatings, and repairs can now be deducted in the first year that they're installed or put into service versus depreciating over 39 years. And the reason you should pay close attention to what I'm about to show you is because the Section 179 tax changes expire in 2025 and could change as early as next year in 2024. Due to this expiration, building owners should consider front-loading improvement projects now during 2023 and investing in their property assets for things like commercial re-roofs or other related capital improvement projects. Do you already know about the Section 179 tax deduction? Maybe you do, but here's some things you might not know. You can now deduct the entire cost of the new commercial roof in year one versus depreciate it over 39 years. See, prior to 2018, tax codes required large capital outputs to be depreciated over 39 years. Given that commercial roofs typically last only 25 years, that 39-year timetable has historically hurt the commercial building owner and their ability to fully deduct the roof asset. But that's all changed in 2017 when Congress passed the Tax Cuts and Jobs Act. Section 179 of this code lets commercial building owners deduct capital improvements in the year they are put into service, meaning installed, versus depreciate them over 39 years. You can write off the cost of your old roof when replacing it with the new roof. That's right. You can get an additional tax benefit when replacing your existing roof. Look behind me on the tax calculator. The cost of your old roof, less accumulated depreciation, can also be taken off your books as a loss. So in addition to electing the deduction for the Section 179 new roof, you can also lower your taxes as a result of any loss by writing off the old roof. You can also take the Section 179 deduction, get this, even if you didn't pay for the roof that year. That's right. Section 179 will allow you to deduct the cost of your roof as soon as it's put into service. That means when the work on your new roof is installed, you can then take the full deduction that year. See, the IRS doesn't care if you actually paid for the roof. Perhaps your insurance company paid for it as a result of a recent storm, or maybe you financed it from the bank, or perhaps you worked something out on a deferred payment from your roofer. The IRS does not care. This means you can get the Section 179 tax benefit without incurring any cash disbursements, which can then be used to wipe out up to $1.16 million in taxable income in other parts of your business. Guys, this makes Section 179 one of the largest multi-million-dollar tax loopholes in the history of the U.S. commercial building industry. So let's do a quick review on how the Section 179 tax deduction can best be utilized in a couple different situations. Number one, commercial roofs and insurance claims. Commercial building owners across the U.S. have been affected by record hailstorms, hurricanes, and other weather-related events. This has resulted in billions of dollars in insurance claims for new roofs. For example, right here in Dallas, we've had record hailstorms in 2023. Hundreds, if not thousands, of commercial building owners have filed claims for new roofs in the state of Texas. So let's look at how this tax deduction applies to an insurance claim. If you have or are expecting to file an insurance claim for a new commercial roof, you can then wipe out up to $1.16 million in other taxable income for your business because you're not actually paying for the completed commercial roofing project. Your insurance company is, but you can still take the Section 179 deduction. Number two, commercial roofs and financing. If you're using financing, you can also enjoy using this deduction to wipe out other taxable income, as this is very similar to the insurance claim model. Again, because you're allowed to take the full deduction even though you're not actually paying for it that year. Number three, commercial roofs and paying cash. What if you're not financing that roofing project? What if you don't have an insurance claim? If you're paying out of pocket, you can still drop that commercial bid or cash estimate price into our Section 179 tax calculator to quickly determine your tax deduction and your actual tax savings. Here behind me, we assumed a 37% tax bracket. That's a heck of a savings. Guys, as you see behind me, the Section 179 tax deduction is a reason to invest in your commercial property right now in 2023. It's basically an enormous discount on the cost of a new commercial roof. So click below and fill out the form to get your free Section 179 commercial roof proposal. And if desired, we can provide you with an on-site roof and property inspection, as well as a commercial roof repair or replacement estimate. We'll then incorporate that estimate into a custom branded Section 179 digital proposal, which automates with the IRS tax calculator, showing you how to maximize the Section 179 tax deduction based on your situation. Remember, the reason you need to act now this year in 2023 is because Section 179 is set to expire in 2025 and could change in 2024. Building owners need to act now to front-load capital improvements and invest in their property assets for things like commercial roofs or other related capital improvements to take advantage of the Section 179 tax deduction. So click below and fill out the form to get your free Section 179 commercial roof proposal.